Welcome to this video on Business and Entrepreneurship Education, Grade 9. In this video, you will learn about Unit 14, which is on Statement of Financial Position. The first lesson for this unit is about assets and liabilities. Now, let's look at the learning objectives for this unit. At the end of this unit, you will be able to define Statement of Financial Position, classify items as assets and liabilities, and define capital. Do you know what a statement of financial position is? Well, the statement of financial position shows all the assets, liabilities, and the owner's capital of a business at a particular date. Let's now look at an example of a simple statement of financial position. So, Zara has a flower boutique and her assets is 400,000 rupees. Her liabilities amount to 100,000 rupees and she has a capital of 300,000 rupees. Based on this, we are required to prepare a statement of financial position for Zara Flower Boutique as at 31st December 2019. Therefore, to complete the statement of financial position, we need to firstly record the assets of 400,000 rupees. Assets is recorded in the first column and the amount in the last column. Then we have to calculate the total assets. As here, we only have one item, the figure is the same, that is 400,000 rupees. The second item to be recorded is capital. Again, capital is recorded in the first column and the amount of 300,000 rupees in the last column. Finally, we have to record liabilities of 100,000 rupees. After having recorded the capital and liabilities, we have to add both amounts, that is, capital of 300,000 rupees and liabilities of 100,000 rupees. This gives a total of 400,000 rupees. As it can be seen, assets is equal to liabilities plus capital. Let's now look at assets in more detail. Do you know what is an asset? Well, assets are items that the business owns. They are important because they allow enterprises to carry out their activities effectively. Remember, assets always has a debit balance. Let's now move on to types of assets. There are two types of assets, namely non-current assets and current assets. Do you know what is the difference between non-current assets and current assets? Well, non-current assets are items owned and used by the enterprise for more than a year. That is, they stay in the business for a very long time. Examples of non-current assets are land, buildings, motor vehicles, furniture, machinery, and equipment. What are current assets? They are items held by the business to carry out its day-to-day activities. Examples of current assets are inventory, trade receivables. Do you know what trade receivables mean? Well, Trade receivables occur when a business sells goods or provides services on credit. That is, the business is making sales but will receive the money at a later date. Therefore, trade receivables is the amount that people or businesses owe the business. Other examples of current assets are cash in hand and cash at bank. Let us now look at how to record assets in Statement of Financial Position. Let's take the example of Crazy Business. Crazy Business has the following assets, namely premises 50,000 rupees, furniture 15,000 rupees, motor vehicles 5,000 rupees, inventory 5,000 rupees, trade receivables 1,000 rupees, cash in hand 6,000 rupees, and cash at bank 10,000 rupees. Now let's identify which of these items are non-current assets and which are current assets. Premises, is it a non-current asset or current assets? Right, it's a non-current asset. Furniture, again, it's a non-current asset. What about motor vehicles? It's a non-current asset. Inventory, it's a current asset. Similarly, trade receivables is a current asset. Cash in hand is a current asset. What about cash at bank? Right, it's a current asset. Having classified the items into non-current assets and current assets, it is now easier to do the recording in the Statement of Financial Position. So, when drawing the Statement of Financial Position, it is important to write the entrepreneur's name at the top so as to know for whom the statement is being prepared for. Then, at the top of the table, you should write the Statement of Financial Position as at 31st December 2019. As seen on the screen, the Statement of Financial Position consists of 3 columns, and the 2 last columns are smaller as they contain the amounts. In the Statement of Financial Position, first we need to record all non-current assets. In this example, we have 3 items classified as non-current assets, namely premises of 50,000 rupees, furniture 15,000 rupees, and motor vehicles 5,000 rupees. Then we need to calculate the total non-current assets. So, 50,000 rupees plus 15,000 rupees plus 5,000 rupees, this gives a total of 70,000 rupees. After that, we have to record all current assets. The first current asset in this example is inventory of 5,000 rupees, followed by trade receivables 1,000 rupees, cash in hand 6,000 rupees, and cash at bank 10,000 rupees. Then we have to calculate the total current assets. Adding 5,000, 1,000, 6,000 and 10,000, this gives a total of 22,000 rupees. Therefore, the total assets for Crazy Business is 70,000 rupees, that is, the total amount of non-current asset, add 22,000 rupees, total amount of current asset, this amounts to 92,000 rupees. Remember, total assets is equal to non-current assets add current assets. Moving on, let's now look at liabilities. What is a liability? Well, a liability is an item that represents what the enterprise owes to others outside the business. Very often, liabilities are what the business borrows and the credit facilities that the business has obtained. Remember, liabilities always has a credit balance. There are two types of liabilities, namely non-current liabilities and current liabilities. What are non-current liabilities? They are items owed and usually allowed to be repaid after more than a year. An example of non-current liabilities is bank loan. What are current liabilities? They are items that the business owes and are expected to be repaid within a year. An example of current liability is trade payables. Moving on, let's look at an example of how to record liabilities in Statement of Financial Position. As you can see on the screen, Crazy Business has a bank loan of 30,000 rupees and trade payables of 5,000 rupees as liabilities. First, we need to identify the type of liabilities they represent. So, bank loan 30,000 rupees is a non-current liability. Trade payables is a current liability. Remember, earlier we said that the statement of financial position consists of 3 columns, and at the top, the entrepreneur's name is written, followed by Statement of Financial Position as at the date, and here it is as at 31st December 2019. First, we need to record the non-current liability, and in this case, it is bank loan of 30,000 rupees. Then we need to record the current liability, that is trade payables, 5,000 rupees. Moving on, let's look at capital. Capital is the amount of money invested by an entrepreneur when starting his enterprise. It is the money used to buy assets and finance other business activities. Capital is also known as funds or owner's equity. To calculate the owner's equity, drawings must be deducted. Note, drawings are cash or goods that the owner takes from his enterprise for his private use. As we all know, the aim of entrepreneur is to make profit, and this money belongs to him. Therefore, profit increases his capital. However, when he makes a loss, his capital decreases. Drawings also decreases his capital. Let us now look at how to record capital in Statement of Financial Position. The format is the same as stated before. So, first we need to record capital at start of 120,000 rupees, then profit for the year 50,000 rupees, minus drawings of 20,000 rupees. As you can see, the 20,000 rupees drawings is put into brackets as it needs to be deducted. Therefore, 120,000 rupees add 50,000 rupees less 20,000 rupees. This gives a total of 150,000 rupees as owner's equity. Let us now consider an example of Statement of Financial Position to show total capital and liabilities. So, the following information is available from John's enterprise. capital 400,000 rupees, drawings 10,000 rupees, profit for the year 30,000 rupees, bank loan 40,000 rupees, and trade payables 20,000 rupees. As said before, it is important to write the entrepreneur's name at the top. Then, at the top of the table, you should write the statement of financial position as at followed by the date. Now, filling in the statement of financial position. First, we need to record capital at start, and the amount is put in the last column. Here, capital is 400,000 rupees. Then, we have to record profit for the year of 30,000 rupees, less drawings of 10,000 rupees. Remember to put the amount of drawings in brackets as it should be deducted. This gives a total of 420,000 rupees as owner's equity. Then we need to record the non-current liabilities. Bank loan of 40,000 rupees followed by current liabilities. As current liabilities, John Enterprise has trade payables of 20,000 rupees. Therefore, the total capital and liabilities amount to 480,000 rupees. Here are some additional links that you may use to gain more understanding on the topic. Well, students, we've now reached the end of today's lesson. Don't forget to watch the second video, which will be on the format of statement of financial position. That's all for now. Until next time, goodbye.